Welcome. We are back. This is going to be a good stream. There is a lot of stuff to talk about. I haven't been doing the pre-week streams for quite some time now. This week it's packed. And I did some scanning over the weekend. I already sent a watch list over to premium, which is more like longer term stuff. But there's a lot of short term stuff I'm keeping an eye on, especially going into this week. So I wanted to go live to talk about that. I'm going to be sharing all of those charts very shortly live on this stream. See if some of them play out this week. We also have some big earnings coming up. Shout out to Cheddar Freeze for sharing the earnings calendar. Tomorrow, Fubo, Zoom, Workday, and Fisker, which has been doing horribly lately. It's down like 30-something% since the high I put in recently, heading into just in a couple of weeks. So we'll see if this could be the turnaround that I hope Fisker can get, but we will have to wait and see. Then Tuesday, we've got Rivian, AMC. There's a pattern forming on that, which we're going to be talking about. We've got Clover earnings before the open. This is actually pretty rare for Clove. Usually they report after the close. If you've been around the stream, you know a lot about that one. So we're going to be talking about that. Perfect timing that Keanu shows up in the chat as soon as I mention the word Clove. I feel like that always happens. But then we've also got Neo, Wendy's, which is better than Arby's on Wednesday. Jack in the Box, Best Buy, Macy's, C3AI, which we're going to be talking about as well tonight. There's another pattern on that one on Thursday. And yeah, it's a pretty good week for that. Not a lot of stuff going on the economic calendar. You have some Fed speakers, but apart from that, I don't see anything major. So we're going to get into all of that while Keanu's in the chat right now. I also want to I already shared this in the Discord, talk about this really quickly. A week from today, next Sunday, we're going to be doing a webinar, Keanu Trades, and myself and some other guest speakers to be announced. I'm going to be talking about Wyckoff, which is something I've talked about on both Clove and Fisker in the past, which in both scenarios played out beautifully. Fisker like doubled when it had Wyckoff accumulation. Clove went up 50% in 20 days when it had Wyckoff accumulation. I'm going to be talking about that because it's not in the course. I've talked about it on the stream here and there, but I want to do an actual lecture on that. And I'm also going to be really going in depth on trading psychology, which there's a small little thing from that in my course as well, which is free. The link is in the description. But again, I've never really gone in depth on that. I've kind of just referred people to Mark Douglas videos, which I do this on my channel for that as well. And I'm going to be giving my own thoughts on that. He's also going to be reviewing some of his trading style. So it's going to be great. If you want to sign up for that, I'm going to drop the link in the chat right now. You use code VIBE, all caps, VIBE, for $10 off, limited spots only. But let's head into everything that is going on, okay? There is so much to cover on this stream, so for once, believe it or not, I'm gonna relax. I'm not gonna go crazy trying to look at 20 charts in 20 minutes, which I'm probably gonna end up doing. But we're gonna slow down. We're gonna understand these charts. We're gonna talk about what's taking place. That's it. All right, there are so many different technicals forming. It's been a pretty rough couple of weeks for the market. Last week was one of my worst weeks personally in a pretty long time. So hoping for a nice comeback this week, and there are some variables that are very interesting. All right, we're going to get started with crypto, then I'm going to talk about other markets, then we're going to talk about the stock market, and I'm going to spend some time also going over how many tickers do I have right over here. 1, 2, 3, 4, 5, 6, 7, 8, 9 tickers on my short-term watch list for this week that I'm going to be revealing tonight on the stream. And there's a few others as well that I want to touch on. So a lot to cover. Let's get started. Bitcoin overall currently is in between these two zones. I just did a webinar yesterday on zones and premium. So if you watch that, then you have a good idea of how these work. But really, there's just big resistance up over here in this blue zone, and then big support down here, this blue zone as well. And you're kind of right in between them. However, do have a little bit of a breakout taking place here on low time frames. On the 4 hours, you can see a little wedge breakout taking place. I think what would be important very short term is to break above these highs around 24K. Because if we go down to the 1 hour chart on Bitcoin, that was pretty much a range you had for about a month, give or take, that you've fallen back into. So we're trying to see if off of that breakout I just showed you, if Bitcoin can break back above that price action rate. So that's what's going on short term. If it can do so, then it might be able to retest this. And then if just kind of zoom out over here, it kind of looks like a larger right angled descending broadening wedge, which is a bullish pattern. And maybe that gives you the momentum to break higher. Looking at crypto mining stocks, hopefully what I just drew out happens. But on the daily, there's not a lot to talk about. They kind of just look choppy. But if we go down to lower time frames on these ones, then you start to see Mara kind of back testing this wedge. But even this classic bullish divergence on the 1 hour, which is going to be a very big theme for this stream when I get into the watch list. Inverse head and shoulders potentially as well. So again, if that Bitcoin breakout does continue to play out, two names, Mar and Riot, could see bounces over at Riot as well. Kind of got that left shoulder, head, right shoulder. Probably extend this wedge out like this. So they have these interesting formations. I will be keeping an eye on those going into the week. Riot is a swing that is currently down 10%. Has like that larger inverse head and shoulders and potential hidden bullish divergence on the daily if you're getting confused by those terms. Of course, it's in the description, right? And then just to wrap it up with crypto, Ethereum, that classic bearish divergence has been playing out. But today, you did get a nice bullish engulfing candle on the daily, which followed the bullish hammer candle on Saturday. If we go over to the 4 hour chart, again, very similar to that Mara and Riot charts, or those Mara and Riot charts, have this inverse head and shoulders look to Ethereum. That resistance has continued to show its strength at 1700, but again, with this inverse head and shoulders developing, it could set you up for a decent breakout, getting above 1700. That would be your inverse head and shoulders breakout and this historical resistance breakout. So hopefully we see that. And that's really it for crypto. But again, keep an eye on those names. Frank the Tank in the chat saying pumped for next Sunday, which means I think you're signing up for the webinar. Definitely look forward to seeing you there. Yeah, for whoever joins the webinar, also make sure to bring some questions. I want to spend some time answering questions there. Now let's move into other markets, okay? This is another thing that I want to keep a close eye on going into the week, which is the US 10-year. It's still testing this zone over here. Let me draw it out really quick. Just like that, okay? It's a very small zone. You can see it was support at the end of October last year, resistance in the beginning of this year, and now you're testing it once again as resistance, okay? So this is something in which we have seen growth stocks, large cap tech stocks struggle for the past couple of weeks as the US 10-year has been going higher. Now it's at a resistance. Let's go down to the 4 hour chart, okay? If we start to draw out this as well, you can see you've had this upsloping channel / rising wedge. So what could potentially happen here? Let me move that daily zone over to the 4 hour chart really quickly. So you can see right here, if you can reject this resistance, what can happen is you break down from this pattern. And since you saw growth stocks, large cap tech stocks pulling back while this was going up, if this starts to pull back now, this could be, and this is just a little hint for what I'm about to get into for the rest of the stream, this could be what helps out some of those names recover after pulling back for the past couple of weeks, okay? So keep this in mind when we move over into stocks. This is why we look at other markets before we even talk about stocks. Not much to say for crude oil right now. It's literally just been going sideways, chopping around. So just waiting for more data on that. Gold has continued to sell off. I think support's closer to around 1780-ish. You have a lot of historical support there. And your 200-day moving average. Also got some hidden bullish divergence developing. Silver, testing a breakdown actually. It's open right now. I think silver actually might be a 24-hour market, but it's open right now. You can see it flushed under, well, it looks like it was closed for Saturday, so never mind. But it flushed under this 200-day moving average. So you are starting to see silver drop even lower. What's the chart that we can look at industrials really just kind of back in the zone. Let me see if I can find a good metals ET. There's one name I'm really forgetting the ticker for now that I use for metals quite a bit. Can't think of it. If it comes to me, look at it. But that's really what's going on in the world of metals. And then a quick look at the dollar currency next. Again, we were just talking about how the US 10-year has been going up and stocks have been going down for the past couple of weeks. Same thing for the dollar currency index. It's been going up for the past couple of weeks after that falling wedge breakout. Now you're getting towards the apex of this rising wedge. So again, running up into a resistance, you have potential hidden bearish divergence. You're at the top of this wedge. These breakdowns are what could potentially set up a little bit of a short-term rally, at least in the market, which is what I'm going to be talking about shortly. And then finally, the Hang Seng Index, open right now, pretty much completely flat, just filling this gap. It's like a gap down, and now it's just testing the red to green. So that's what's going on in other markets. Let's spend the rest of the stream talking about stocks right now. And there's a lot to unpack here. Frank saying that he already signed up for the webinar. Love to see that. Again, the link for that's in the chat. Talking about trading psychology and Wyckoff accumulation. I know Trades, who's also going to be revealing some of his trading methods and styles. It's going to be pretty cool next Sunday at 4 p.m. EST. All right. Calm down a little bit. Drink some tea. Which does have caffeine, so I don't know if that's going to help. But let's take a look at the S&P 500. Which again, let's see. Since pretty much the beginning of this month is down about 5%. You had a very, very aggressive rally in January. And right now, this is where I want to start for the S&P 500. You've pulled back about halfway down from that rally. So if we use our Fibonacci, you can see you are right around that 50% retrace, sitting very comfortably in the golden pocket, which is in between the 50% retrace, not even technically Fibonacci, that's from Dow theory. But you're in between the 50% retrace and the golden retrace, which is the 618. What is also right in between both of those fib levels as well? The 200-day moving average. So you can see all together over here, 50% retrace, the 618, and your 200-day moving average are lined up all around this price area, all right? And on top of that, this is pretty close to a back test of this descending broadening wedge that you've been in. So you have a lot of variables starting to stack up over here for the SPY to potentially bounce. Volume is also starting to rise. Even if a couple of these indicators short-term do fail, you have a little bit more just beneath that as well. You have this whole entire zone over here between 390 and 392. All right, a lot of highs and lows there from the past. And what lines up with 392 on the SPY? The pattern completion zone of this bullish bat. So you have a lot of stuff going on in the lower 390s for SPY. You did start to see a little bit of a bounce in the afternoon on Friday. That's a little bit 50-50. If we go back to Friday's price action, yes, it was a nice little bounce. You are bouncing off of a historical zone. You can see you started to put in this low here at 394. You have a lot of lows at that level from the past, such as January 25th, a high from January, and some major lows from the end of last year. So that's a big level. The only thing though, however, is you're kind of bear flagging off. Now you could break this bear flag to the upside, which would be great. But really how I'm looking at it is this. If this bear flag on low time frames tomorrow breaks down, then that could set you up to go down to the pattern completion zone of this bullish bat on the 1 hour. And then potentially, let me draw this out a little bit here as well. Let me change that to a brighter color. Then you could potentially basically, if that bear flag breaks down, which is this little price action here, continue to fill out this wedge, get towards the pattern completion zone of that bullish bat, and then break out. If we just go into the week with a very good start, then let's go back down to the 15-minute. let's say you break above this wedge, you break above this little resistance zone. You could see it was support from last Thursday. It also was support from January 17th. Let's say you break above that. Then you got this gap fill all the way up at 400. So either way, you have some variables in both directions, whether you break this little wedge up or down to look at. The only scenario where everything kind of changes is if you just fail to react at the pattern completion zone of this spat, or to break out of this wedge and you just completely give up all of that and just break down. And then in turn on the daily, you'd probably be breaking down from the 200-day moving average, this zone, and then back into this descending running wedge. So really all of this is kind of painting a picture that the area to potentially bounce for the market is that green box that I just drew. And if you don't, you're kind of screwed. So that's a little bit of room. You have about a 1.5 to 2% of room to get that bounce in for the market, maybe take us back up towards the 400s towards the end of the week into the week after. And if you don't, then we'll talk about it then, because that's a very different story. So that's really what's going on with the SPY. Just to touch on one more thing I was talking about earlier, how you're at this 50% retrace, you've retraced halfway back down. If we also go to this rally that you saw at the end of last year and you look at this major swing low that you put in, let's look at the fibs again, 50% retrace. So let me take off all of these drawings from the chart and let's just look at it like this. From this low to this high on that dip, you came back down halfway. All right, you put in a swing low. Now, let me move this over a little bit. From this low to this high, you've come back halfway, right? So on your last major low in the market, you made a 50% retrace, which was right over here. Then you put in a new rally. And then again, you made a 50% retrace. Let me see if I could pull something out of the good old textbook really quickly. All right, here it is. Haven't talked about this much on the streams. I actually learned this through Mitch Ray's streams. And this is what could potentially be setting up in the market. And it's one of those patterns where it could technically be a bearish pattern, but in a bullish place, right? You know, an example of that would be like an incomplete harmonic, something like this. 1 second. Let's go back over to that 1 hour bullish bat, right? So think about it like this. All right, you have this 1 hour bullish bat on the SPY, which is that M-shaped formation. If you want to know about harmonics, my free course is in the description. Now this is a bullish pattern, but you are in a bearish part of the pattern, correct? It's a bullish pattern once you get down to this D point and then you start to reverse. That's where the bullish bat comes from. It's when you get down to that final point and you start bouncing. But from all of this price action that I'm drawing out right over here, that is a bearish part of that pattern, right? That's actually called a bat action magnet move, where when you break under this B point right over here, it's actually potentially a short down to the pattern completion zone when it actually becomes a bullish pattern. So in bullish patterns, you can have bearish parts to them and vice versa. In bearish patterns, you can have bullish parts to them. So let's delete this for a second and let me pull this up, okay? Let's make it transparent. Full screen. Let's look at it like this. It's going to be hard to, like, you know, perfectly line this up. But something like this. This is a 3 drives pattern, okay? Now, yes, technically when it's complete, it turns into bearish, and that's when you can actually sell off. But again, you had your first drive, which was this first move up. Let me kind of look at it like this. It's really hard. So just imagine that this is like your first drive, right? So you have drive 1, which is pretty much all of this. I feel like, I don't know, like football coach right now trying to draw like a game, whatever it's called. This is your first drive, okay? Then you have your second drive. Put in your low, which is what is potentially happening right now. And this, if this pattern does play out, that is what can initiate that third drive. So again, this lines up with everything I just talked about. The bullish bat, the falling wedge on the 1 hour, being at the 200-day moving average on the daily, the support zone I mentioned, all of those variables are also aligning with this bullish 3 drives pattern, or at least even if it turns into a bearish pattern eventually. Right now it's at a bullish part of it. All right, we had 2 drives. Okay, let's move this aside for a second. This was your first drive up, you pulled back. This was your second drive up, you pulled back. Okay, now typically you want a 618 retrace. Again, if you remember, it's not too far from that. Like if we really look at it over here, you came down like in between the 50% and the 618 retrace on your dip, and then kind of the same thing on this one too. I'm just using the 50% as for the sake of the stream. But even if we look at this, like again, if that formation down to the bullish bat on the 1 hour plays out, you could still fall down to your 618, which again is 392. That's why 392 is such a key level for the SPY. So much is lined up there. But again, you might never touch it because you're starting to already bounce off the 200-day moving average. The main point you want to get is that little green box I drew out on the daily, which I'm going to go back to in a second. But I'm just showing you how many variables are kind of coming together, not just on the SPY, but on other stock market indices, on individual stocks we're about to look at, and also in the other markets with the US 10-year and the dollar currency index starting to show rising wedges. It is kind of a storm of variables coming at the same exact time. And that's really what gives you those higher probability predictions. You know, I'm not a huge fan of using that word with trading, but it's just a higher probability prediction. It's not a certainty, but you finally have variables saying, okay, we've had a pullback in the market. I'm not saying this is going to be our forever bottom, but this could be a short-term bottom put in around this area on the SPY. So those are the variables I wanted to bring up for the SPY. Let's take all this off the chart. And then just to reiterate it one more time, all those variables line up pretty much around over here. So we are looking for those variables to play out within this area and then see maybe that next drive in the pattern. And that is the S&P 500 heading into this week. Let's go over to this now. All right, same thing for the Qs, testing the 200-day moving average. All right, we really want to look at it like this. You've kind of got a whole entire flag forming here. On even the daily time frame, it's kind of visible. There you go. It's like a little bit of a bull flag into the 200-day moving average. So yeah, you got a little bit of a bull flag into the 200-day moving average on the Qs. If we go on to lower time frames, 4-hour chart, I would like to see the Qs reclaim this zone. You can see kind of between 293 and 297. You were putting in highs before, then you tried to bounce off of it, but for a little bit on Friday, you got under it. So a quick move back above that would be kind of necessary for all this bounce stuff to play out. What could help with that, of course, I don't even know if I mentioned this on the SPY, but you got the same thing. So many other charts. 1 hour classic bullish divergence on the SPY, and also on the QQQ. Got the classic bullish divergence and this wedge forming. And you best believe that 1 hour falling wedge is also forming on a lot of large cap tech stocks too. So these are the patterns that could potentially put us into a short-term bounce. And again, that's just what I'm really looking at this week. And of course, with multiple gaps to fill above. All right, you've got one gap over here, got another gap over here, got another gap over here. Might be, yeah, that's pretty much it. But you've got 3 gap fills above you if this wedge plays out just like that. So you've got a wedge with gap fills, classic bullish divergence at the 200-day moving on the daily. Volume starting to really pick up around these lows. There are variables. Like even if I put out a level over here at 290, take a look at this. Look at that. Look at this, and then look at this. Let's see. All right, so those are again a whole entire amount of variables. Let me put that to the chat and premium. Those are a bunch of variables again that could help out the market. That's the QQQ. We're mainly going to be looking at some large cap tech names, so keep all that in mind. A little bit, I just want to quickly look at small caps. We do have some big earnings for small caps and mid caps this week. What's key for the Russell 2000 this week is reclaiming 188. I'm not a huge fan of how it broke down from this ascending wedge. So hopefully that just doesn't do much. You broke down, sold off a little bit. You need to really reclaim that 180. Well, that's very, very key. A lot of lows and highs there from the past. I'm going to keep it simple on the Russell. That's really all we're going to talk about. And then we've also got the ARK ETF. All right. Really what's critical here, let's go down to lower time frames, is this price action at 38.50-ish. Okay. You can see these highs from the beginning of December, and then also this recent low from the beginning of this month. You're under it a little bit right now. Same thing as what I said for the Qs on the 4-hour. You're under the big level a little bit. So it's very crucial to start off the week good to reclaim those levels. I don't know if that's going to happen, but that's very, very important for a lot of these charts to play out. Okay, you can eventually maybe get some classic bullish divergence on the 4-hour too, but this is the big level. If you can reclaim that, that would be very, very important. If you can't, then again, this is the worry, the potential bat action magnet move, which is what already happened to the SPY actually. Let's go on to the 1-hour. Right, the ARK right now is pretty much where the SPY was, like right over here. It's like testing that B point of the harmonic on the final wave. And to prevent that final wave from happening, taking you much lower down to the end of the harmonic, what you would want is to reverse right over here. Because if you break under this B point level, it could set you up to sell down to that D. So again, very, very critical level on the Qs. And the ARK ETF. Let me do that really quickly. But that's pretty much what you want to know for the indices heading into the week. Again, another chart with classic bullish divergence on the 1-hour. That's really starting to paint a story. And then there is one last thing, okay? We talked about the US 10-year, the dollar currency index showing rising wedges, heading into a resistance. We talked about all the stuff on the SPY with the bullish BAT, the support levels, the 200-day moving average, the 3 drives pattern. We talked about the 200-day on the Qs. We talked about the 1-hour classic bullish divergence, the 1-hour falling wedge, the gap fills above. We've talked about so much, right? There is one other thing that I want to look at going into this week, which is the VIX. All right, let's go down to the 4-hour chart. And here you can see, while you're getting these bullish falling wedges on the Qs and the SPY, which looks something like this, you're getting a bearish rising wedge or bear flag, however you want to look at it on the VIX. So right now, let's not open and permit. It's not time to edit. Right now, so the SPY and the Qs are kind of like right over here, while the VIX is over here. So assuming they break out, that happened to the VIX is this. So again, it's starting to really paint a story, and we're just at that test point heading into. And if you do break out, the move could be very, very quick as well. Because you're literally at that point. You kind of closed last week at that major test point. So those are all the variables just in the other markets and the stock market and the VIX. What do we have on top of all of that? A whole bunch of individual stocks, which at the end of the day are the names moving the indices that are also showing variables. All right, let's get started with Meta, which has been pulling back for some time now. Let's go down first to the 4-hour. We've got hidden bullish divergence developing. You can also see if I draw a level right over here, it is back testing this 170 level, lows from over here, resistance from all throughout over here as a potential support. And of course, 1-hour falling wedge with, just like the QQQ and the SPY, 1-hour classic bullish divergence. I did share this at the end of the week in the Discord and the trading chat. But again, you're seeing this on the SPY and the Qs, you're seeing this on Meta, you're seeing on a lot of other names which we're about to look at. The variables are very similar and they're across the board. So this is Meta. Let's move over into Tesla. All right. 4-hour hidden bullish divergence potentially as well. And that's such a good combo. You can see it on both of these names, Meta and Tesla. It might even be on some of the indices potentially. When you get hidden bullish divergence on a higher time frame, classic bullish divergence on a lower time frame, that's probably the best signal of divergence you can get. Why do I say that? Hidden bullish divergence implies continuation, which means to get hidden bullish divergence, you have to be making higher lows and you have to be in an uptrend on larger time frames, right? You want to be taking bullish trades when you're in a bullish trend. You do not want to have a trade that's going against the trend. However, you don't want to be buying the top. You don't want to get into the trend when it's literally at the top of the trend. You want to wait for your flag to form, for a little bit of a pullback, for that low to come in. And that's what allows for your short-term 1-hour chart classic bullish divergence, which is your reversal. So what are those divergences telling you? You have a 1-hour divergence, which is saying to you, short-term, you've been going down. and your classic bullish divergence is implying that your short-term trend is going to reverse to the upside. Then we go to higher time frames, and it's telling you, since you have hidden bullish divergence, long-term you've been going up, and this is implying that you're going to continue to go up longer term. So you're getting both bullish continuation divergence for the longer term trend, which is an uptrend, and you want that to be in your favor if you're going on to the long side. And then you're also getting short-term reversal bullish divergence, which is on your 1 hour chart, telling you, okay, short-term it's been going down. So you can see over here, that's telling you that short-term you might start to get that bounce, and then they both play out together, and that's what could actually happen. I'm not saying it's going to happen exactly like that, but that's really what that divergence is kind of mapping out for you. All right, so you've got that on Meta, you've got that on Tesla as well. There's your 4 hour hidden bullish divergence. Go down to the 1 hour. There's your 1 hour. Well, for Tesla specifically, it's not classic bullish divergence on the 1 hour because you technically made a higher low, but at least you have bullish convergence. So let me just correct myself a little bit there. However, what do you have on the 1 hour chart for Tesla heading into the week? Let's zoom out over here. One very simple way to look at this is a bullish pennant. You had this uptrend, you created this little triangle flag pattern, and it could break either way, but since it is occurring in an uptrend, the probability is slightly higher that it breaks up. You've also got this gap fill sitting at around 201 for Tesla. So again, you're seeing these large caps also showing short-term bullish patterns with the QQQ and the SPY doing the same. The indices can help move the individual names. The individual names are what are creating the indices movements. It can just kind of create this ripple effect while the other markets are helping out too. All of the pretty much all of the variables I look at for the market right now, just short term, are switching to bullish after this pullback we've seen for the past couple of weeks. So you can only place a certain amount of trust in technicals. It's never going to be probably over an 80% certainty. But as many variables as you could want for the market to be showing right now, they're kind of showing. That's all I'm saying. I don't know if they're going to play out, but I'm just displaying that to you. I'm just the middleman. At least with my system. Other people might have different systems. Some work better in certain times, others don't. We'll see. But that is Meta and Tesla. Let's keep going. Amazon, another large cap name that's been pulling back. Let's go down to the 4 hour chart. Potentially in bullish divergence, just like the past two names that we looked at. Let's go down to the 1 hour chart. Another huge falling wedge on the 1 hour, heading into the week with classic bullish divergence. So yet another name that's showing the same exact formation as Meta, as Tesla, as the QQQ, as the SPY, almost at the end of the wedge too, with of course gaps to fill. You got one at 95.60, you got another one sitting at 98, you got another one all the way up at 111.5. You got another one which didn't even get filled on this rally at 115. You've got another one at 120. I'm not calling for those prices or anything, but you have those gap fills above you. You also have gap fills to the downside. But again, if this classic bullish divergence on both oscillators, the RSI and the MACD, play out, plus the wedge, you could see a move up to at least fill some of those gaps, maybe at least the closer ones. But there is another chart to add to the list. Let's keep going. What's next up? Google, right? 4 hour chart. This might be a bullish harmonic actually as well. This might be a bullish shark. There you go. Bullish shark on the 4 hour chart for Google. This also lines up at this gap fill. Let me do everything for 1 second. You can see that on Friday you did fill this gap up from January 11th. Of course, you've also got some upside gap fills for Google, just like most of the other names from these gap downs in the recent weeks. Let's see if there's any more. So more gap fills to the upside for Google as well. And let's go down again to the chart. Another 1 hour falling wedge with classic. So there's another one, and that is pretty much the bulk of what I wanted to talk about with large caps. There are 2 or 3 other names I also want to say that I am keeping an eye on. Let's start off with AI. We talked about this slightly last week. Let's go on to the 4 hour chart. I'm just waiting to see which way this breaks out. You've got this descending triangle, again, technically a bearish pattern, but it's happening in an uptrend, so it could break either direction. You've also got hidden bullish divergence. So I'm waiting to see which way this breaks out. there's been a lot of chatter around this name specifically, and just obviously about AI in general over the past couple of months, with the explosion of like Chat GPT really starting to bring AI to like the mainstream. Even I think Facebook had some news on Friday with it's called Llama or something. Okay. Here we go. Meta rolls out, I gotta stop saying Facebook. Meta rolls out large language model Llama for researchers. It's a large language model meta AI to support researchers working in the AI field. You've obviously had a lot of other large cap tech names getting into AI, which, you know, really not getting into AI, but starting to just announce AI that they've already been working on because of the news coverage on it lately. But yeah, a lot of talk around that one. Also, Square just had earnings. On the daily chart, you've got this hidden bullish divergence, got a little bit of a wedge. This one actually I got from someone else on Twitter. Let me see if I could. I like to give credit where credit's due. I wouldn't like if people start taking all the charts I'm sharing. Eagle Investor, following for a while, pretty much shared this chart, so I put on watch list as well. And yeah, you've got this flag, hidden bullish divergence, bouncing around the 200-day moving average, small gap just above to fill, and that's another name. So those are the majority of the names for like large caps, even though I don't know if Square are, but I'm sure Square might. Let's get into some smaller caps now, which are reporting earnings this week. 3 names that we talk about on this stream a lot. We're going to be starting off with AMC, which I believe reports on Tuesday. All right, so there is a lot going on with AMC right now. I'm not going to lie, I tried to maybe play this a little bit early. I jumped the gun on some calls, and I just got caught up in all of this chop. But I think Zeke also shared this on Twitter. You've got this major 1-hour cup and handle forming on AMC. Again, it's heading into earnings this week, so we'll see. On the 4-hour chart, you've got this down-sloping channel with a partial decline, which means if you can get back up to that breakout test, you have 70% chance of breaking out. On the daily, you've already had a wedge breakout. This is still a swing, which, you know, it already hit 2 targets, but can maybe onto the 3rd and 4th targets. We'll see. Then let's go up to the weekly. This is what, even on CNBC, somebody was talking about this, I believe. Weekly, you've been in this falling wedge literally since you had the mega squeeze last summer. Actually, no, it's 2023, 2 summers ago. Wow, time has flew by. And you're finally breaking out of this wedge you've literally been since that squeeze on the weekly time frame. So it could take time. Obviously, this is kind of hoping that earnings align with the technicals, which they do not always do. But there is that, and that's another name. Now let's move into Fisker, which reports tomorrow. There's not a lot to talk about technical-wise right now. All right, you had very strong support level at 650. That broke. You've been selling off since you broke it. So really the only thing for me to say right now for Fisker is earnings are tomorrow. And since this top you put in literally at the beginning of this month, Fisker is down 35%. So I don't know the statistics, but I feel like there have been a good amount of times where stocks have sold off into earnings, and then as long as the earnings weren't horrible, you can get a bounce off of that, because even if the earnings were kind of bad, it's like people can argue that it was already priced in. Stock just lost 1/3 of its price in the last month or less. So I feel like anything except for horrible earnings could potentially lead to a relief rally, just because it's down 33% in like 2 or 3 weeks heading into earnings. So I feel like any good news could really help out here. It just needs something, in my opinion. And unfortunately, there really aren't any technicals right now to talk about. You're not even oversold yet on the daily. There's no pattern. It's just price action right now. Clov is kind of similar as well. It reports on Tuesday. A little bit different though. I think really any low above this major low at 90 cents would be huge for Clov. Because that would potentially be your first higher low on the daily time frame in I don't even know how long. The inverse head and shoulders did fail that, but again, if you can start to curl here, potential hidden bullish divergence on the daily, potential classic bullish divergence on the 4-hour, maybe a wedge forming here. So there's variables on those names. Obviously, it's going to come down to earnings. I can't predict how the earnings are going to go, but just keep in mind, especially for Fisker and Clove, they've been selling off going into earnings. We'll see. Like you can see over here, going into these earnings, you sold off, then you bounced a little bit before going lower. Let's see if there's another. These earnings, vice versa. You went up into earnings, and then you sold off after the earnings. So it's like kind of like whatever you were doing before the earnings, like you reverse after the earnings come out. Same thing over here. Selling off into earnings, then you got to bounce after. Over here, you were selling off into earnings, then you got to bounce after. Let's look up over here. This one was the outlier. You were, I mean, technically you were going up into earnings, and then you sold off after. So you see that kind of happens sometimes. Like if you go up into earnings, then it's like anything bad can really drop the stock, because if you're going up into earnings, that means the investors might be expecting good earnings, and if you don't get that, it's just not even close to expectations, and you can really sell off. And then vice versa, right? If you're selling off into earnings, as long as you don't have a horrible earnings, any good news could really help out, because again, a bad earnings might have already been expected. So if you have anything but a bad earnings, it could help out, even like a neutral one. But there's no textbook I'm taking that from. That's just like a little psychology thing I do in my own head sometimes. And usually I like to do it when it aligns with technicals and there's other news revolving the company. There hasn't been a lot for Fisker and Clove lately. One thing that did happen, and also ChargePoint, I think, reports this week as well, which is interesting. Yeah, on Thursday, ChargePoint has earnings. Also, C3AI is on Thursday, we were just talking about. But let's go back over here. Fisker said on Thursday that it's partnered with ChargePoint for their electric car drivers in the US and Canada with access to more than 210,000 charging stations. Under the partnership, drivers will be able to use ChargePoint's networks of level 2 and DC fast chargers and roaming partner stations, which represent 80% of public charging ports in North America. I don't know if it's really their decision at the end of the day, but I know they moved their earnings, I think a day later or something like that, maybe a couple days, but it would have been interesting because they could have announced that tomorrow during the earnings, and then you would have had ChargePoint talk about that and their earnings on Thursday. Maybe both of them still talk about it, or at least one of them talk about it in their earnings calls this week, but they decided to drop this news a few days before, and obviously it really to help stock price. But that is that, and that's really, I feel like the last 45 minutes was a lot. I feel like now people are starting to kind of come into the stream, but if you missed out on the last 40 minutes of the stream, I just went in on literally everything, and please watch that before the week starts, because there are a lot of charts that I just revealed: Meta, Tesla, Amazon, Google, Fisker, AMC, AI, Square, Clove, Fuse, SPY, ARC, that have very particular patterns to them going into this week. So make sure you take a look at all of those before the week starts, or maybe early tomorrow morning, whenever you want to. But literally, I haven't been doing the pre-week streams for a while, but I just started looking at all these charts. I'm like, wow, I have to go live and like share this. We'll see what happens. But yeah, I'm sorry I've kind of ignored the chat for the past half an hour. There were just all these charts I really wanted to talk about, but make sure you hit the like button, hit the subscribe button. Just a couple of quick reminders. Next Sunday, shout out to Frank the Tank, who already signed up, who said that in the chat. Next Sunday, Keanu Trades and myself doing a webinar. I'm going to put the link in the chat right now. We're doing a webinar. It's $10 off if you use code VIBE at checkout, and it's recorded. So if you can't make it at 4 p.m. EST next Sunday, but you still pay for it, you'll get the recording, watch it on demand. And then we also have some guest speakers coming. I'm going to be talking about Wyckoff. We just looked at Fisker and Clove, which I've had huge Wyckoff trades off of in the past. I don't have anything about that in the free course. Links in the description. But I do want to make a lecture on that. And then also I'm going to be talking about trading psychology. Again, nothing, I have a little bit of psychology in the course, but nothing crazy. So I want to go more in depth. That's really what webinars I feel like have helped me do. Because not only do I get to share that knowledge, but I feel like I make myself study a lot more before the webinar, so I understand it even myself. It's kind of like a win-win. But that link I just dropped in the chat. Next Sunday, it's going to be a whole bunch of speakers, and you can watch the recording as many times as you want. I'm not trying to talk about numbers and stuff, but you know, yes, it is paid, but you can use that for the rest of your trading career. It's a lot of knowledge. It's like getting a book at the end of the day. You get a book, you pay for it, you get knowledge from it. You don't want the book, don't pay. But there it is. And then also one other little plug after that 40-minute run through of all those charts. There's still the sale live for premium. That is the pin chat right now. It's 40% off annual if you want that. Annual is already 30% cheaper. So I don't even know how the math compounds with that, but it's basically 40% off something that's already 30% off, whatever that comes out to. But you can look at the dollar amounts. That is the pin chat, and that comes with 12 webinars. I do monthly webinars just myself, not like the whole thing that we're doing next Sunday with Keanu with like guest speakers and the VOD and everything. The monthly webinars I do in premium are just for premium members, and they're quick lectures. This weekend I talked about zones, and I talked to the premiums and stuff, and not recorded because I do them every month. But there's obviously the options, the swings, the weekly watch list, which I just shared. Actually, I shared on Friday. No, I shared on Saturday. There's all that stuff, so go check that out. And if you're not in a position to pay for anything right now and you're just kind of getting into stuff, the Discord is free at the end of the day. The link for that is in the description. So there you go. Finally, I can take a look at the chat, I feel like. Earlier in the stream, I said Wendy's is better than Arby's. I think you implied Wendy's is poop. Let's see. I'm the Paris is how you feeling, champ? I am feeling better. Thank you very much. Yeah, it was not great a week ago in Toronto. I was really under the weather for like 2 days, but I got like better. It's just like a quick cold, I guess. Me Tenderfoot is outstanding. TA champ, thank you. Gold Miner says YouTube just now notified me about live. Would have been here earlier. Yeah, that is interesting. Like I know like the viewership doubled in like it's like 20 minutes. It's like the notification went out like something. You already looked at Clove. So that's pretty much what is going on heading into the week. I hope you enjoyed all of that. Again, make sure to check out those links in the description. For people who are watching the podcast, I know we've taken a little bit of a break. It's just been a really crazy schedule the past couple of weeks for a lot of us with traveling and other stuff. So the podcast should return next weekend, but if you haven't watched all the episodes, you can, a few things on the podcast are kind of like current events, but a lot of it is timeless, if that's the right word to use. So if you haven't watched the podcast, I think we have 6 episodes out already just from this year. Go check that out, the links in the description. And I'm excited for this week with everything we just talked about. Again, if you just came into the stream just to hear me talking about webinars and podcasts and stuff, I'm sorry. But you can literally just scroll back and the last 40 minutes of just nonstop charts. It was like one after another, the 1 hour classic bullish divergence, the wedges, like it's crazy. So go make sure you watch all of that. And yeah, I mean, do you guys want to do some ticker requests? If you do, drop them in the chat. I'll take a look at some before I head out. I already see that Steve put the crypto in the chat. So we'll take a look at that. Make sure the like button and the subscribe button. There's not a lot I can talk about here. I'm just going to chart out some levels. Those are some bigger levels. Lower time frames. You've got a little bit of hidden bullish divergence. You're starting to curl here. You might have like a stuff, but that's really all I can talk about on that. Is it SI or SL? SI. This looks a little bit like a bear flag to me, honestly. It's testing a breakdown right now, so that's really it. You do have a support down at 1218. That was kind of where this IP is at, and then you go there in the summer of 20. So if it does break down, which as it did, that's kind of your support. That's really it. End phase, the zone was very, very key. Broke under it, and then you flipped it into resistance, and now you're selling off again. But you did fill this gap, or you're pretty much filling this gap right over here. I guess maybe shorter term you might have a little bit of a wedge form. So short term it's a little bit 50-50, but longer term it's pretty important to reclaim that zone, which honestly even dates back all the way to highs from 2020. And other news, the GOAT boxing, greatest boxer of all time, undefeated knockout artist, Jake Paul, lost today. First loss. I'm kind of at a loss for words right now. It was a close fight. I know Mehdi might have some words to say about this. I know Anna might have some words to say about this. I know my co-host for the Trading Addicts podcast, Garrity, has had some words to say about this. All I want to say is, not everyone can be great all the time. Sometimes you just aren't at your fullest potential, and in a sport like that, one night determines everything. It's not like you have, a full playoffs and everything, something like that, or like a regular season. So at the end of the day, I think the GOAT will return when the time comes, and I'm not too worried about it. But we just had to bring that up on the stream because, of course, that completely relates to the SPY in Bitcoin. Actually, at Bitcoin right now, it was going up, and then like it started to kind of start going sideways. Like it started losing steam because he lost. So it's really important, and I just want to make sure we talked about it. IM says that point they took from him did it. They also took a point from Tommy Fury though. What was it for? I don't remember what it was for. They took a point from both of them. At the end of the day, I don't know. I think Tommy definitely, for sure, won the first half of that fight. I think Jake had some nice rounds in the second half, especially the last round, but it is what it is. Since you're talking about Wyckoff, does NNDM have any? Potentially, yeah. Say this could be some Wyckoff going on. This was kind of like your spring back up around over here, LPS. So if it kind of gives you like this and then the backup, or I think I messed up those terms. Let me see if I can jog my memory quickly. I just mixed up two of them. Nope, that was fine. Okay. So yeah, it's like spring test, LPS. So now you're kind of looking to be potentially a sign of strength. Or really this pretty tough sometimes, so. Something. So yeah, if you look at it as something like this. Could be. Obviously just getting above 3, maybe flipping into a support would be key. Actually used to be a support last year. So it's all about that zone. Break it, you got some gap fills between $4 and then big level 374. Okay. Not a lot to talk about. It's like your support, it looks like. Term. Got a couple different patterns here. Just gonna look at it, it's like a broad kind of. That's really it. So that's gonna do it for tonight's stream. I hope you enjoyed it. Hit the like button, hit the subscribe button. I will see you on the next stream. Peace out.